Hey, what is up you guys, and welcome back. It's Pepe Cedeno, and welcome back to another video. So I wanted to talk a little bit about REITs or real estate and which one would be a little bit better for you as an early investor, as an investor in general. Which one seems to be a little bit better? Because I hear a lot of people always talk about, they're always pumping up like the real estate and how people become such millionaires with real estate. And that, don't get me wrong, a lot of professionals would suggest that real estate is a lot better, would suggest that real estate is the way to go, because real estate, you're actually gaining a little bit more money, gaining a lot more money from if you're renting out property through your tenants, if you're actually flipping your home and actually appreciating the value because of the fact that you actually bought a home for a lot less, you fixed it up, and then you're selling it for a lot more. And if you're getting money like that, then real estate definitely does look like the best opportunity for you to, to gain a lot more money as well. But at the same time, this is what a lot of people are not sometimes aware of, is that REITs actually gives you exposure into a lot more rental properties and a lot more rental facilities than you would actually imagine. When you invest into REITs, there are companies that are actually invested into hospitals, companies that are actually invested into the malls, into the entertainment business, and the list goes on. So when you're invested into those, you're actually investing into you have a lot more diversification in your portfolio, and you're able to get a little bit more exposure into a lot more real estate, rather than just the real estate properties where you're actually probably just renting it out to tenants, or you're renting it out, or you're actually flipping it out and selling your home. Doesn't give you a lot of exposure. The exposure is actually very small. So why is REITs such a good opportunity for investors to multiply their income? Well, for starters, REITs actually pays out higher dividends than any other stocks. For example, than ETFs, than mutual funds, and individual stocks in general. So REITs actually pays out a lot more money and dividends back to the shareholders. So when it comes down to it, you actually might look at what opportunities can you get into with REITs, and why REITs over real estate. Well, when it comes down to owning property and real estate, you actually have to keep up with, you do have to keep up with the maintenance of the home. You have to keep up with depreciation of the value of the house, and you have to keep up with tenants and their complaints, and they're calling you at 2 or 3 in the morning to fix issues in their house because they can't wait till the next morning. So you have to, as a homeowner, you have to go over there, or you have to have a management group that you're paying to go over there and fix their issues with the house. So when it comes down to being a homeowner and renting it out as a property, it's a little bit, you definitely do have to work a little bit harder, because you do have to have those kind of situations that do arise, that do come up, and that you actually have to, worry about doing as well. If you're the type of person that does not mind fixing things, if you're not the type of person that does not mind dealing with tenants, or even having to wait to resell a property, and you sometimes have to wait a couple months or even a year to sell property because of the property is not selling, or you risk the opportunity, you risk that the home may not sell for the price that you want, so you're at least hoping to get some value from it because of the fact that you put money into it and you bought it. So yeah, you're not trying to break even, and you're not trying to break at a loss. So it's a lot to really take in. It's a lot to really work with, and a lot to deal with at the same time. Now, don't get me wrong, real estate is a very great opportunity, because it gives investors the opportunity to grow your money a lot quicker. Because if you are the type of person who can flip a home, or you're the type of person who can get good tenants and have people pay you, and you're actually getting a lot more money at a monthly basis, depending on how much rent is, and depending on your location, you're actually able to bring in a lot more money a lot quicker. Then yes, real estate would definitely be the great opportunity for you. But if you're the type of person who does not have the money, or does not want to have loans with the bank, and does not want to be involved in any types of loans, and just want to get dividends by doing absolutely nothing and letting management and CEOs do all the work for you, and while you're sitting back and just collecting dividends as another set of income, then yeah, REITs is definitely a lot better for you as well. So me personally, I'm actually into REITs right now. I love REITs. I'm also into ETFs and individual stocks as well. But REITs is actually something that's actually growing a lot faster for me in my portfolio. So the top 2 REIT stocks that I have, New Residential Investment, the ticker symbol for that one is NRZ, And as I mentioned before, that one's actually one of my favorite because that one's actually paying me 50 cents a dividend, and it's actually giving me around $2 in growth as in the value. I bought it at around $15.84. It's actually grown to over $17 a share. And like I said, it's actually been paying me 50 cents a dividend, and I actually have 25 shares. So that's actually been around $12.50 back to me. When it comes down to innovative industrial properties, ticker symbol IIPR, that one's actually growing crazy rate. That one actually bought at $73 a share and is actually over $100. I think the last time I checked it was around $103 a share. And that one's actually giving me $1 back in dividend. So that one is amazing. I kind of wish I would have bought a lot more. I bought 10 shares of that one. And yeah, that one's actually growing really good. And it's actually helped my portfolio continue to grow. So I'm averaging around $100 a day in my portfolio, thank God. So I'm actually averaging really good on my portfolio. So I'm actually gaining a lot more in the market. Now, from value and from dividends, I'm actually growing my portfolio. But at the same time, it's something that, I do diversify a little bit more into REITs, ETFs, and individual stocks. So that is something to think about as well, because you don't just want to have invested into one section of your portfolio as well. When it comes down to REITs has actually grown very significantly throughout the year. Annual raise is actually grown. It's actually getting a lot more growth than in real estate properties in general, because it's having a 15% growth per year averaging compared to the S&P 500, which is averaging at around 12% growth. Real estate private properties are actually around 8% annual growth. So it's actually a big difference when it comes down to that. And like I said, REITs, you don't actually have to do any of the work. You don't actually have to do anything, because you let the managers, you let the CEOs of the REIT companies deal with everything. They're the ones doing everything. They're the ones keeping up with the maintenance in the properties. They're the ones doing everything, and all you're doing is owning shares into those REITs, into those companies, and you're actually just getting money back for doing absolutely nothing. So that is something that you want to be able to look for and that you want to be able to get into. I definitely enjoy getting into a little bit more of the stock market and actually getting a little bit more into exposure in REIT stocks rather than a real estate. I don't know about you, but I personally do not want to get a loan. I don't want to deal with having paying any interest. I don't want to pay any more money than I already have to, because I'm already trying to pay my school loans. And like I said, I ain't trying to pay anything else at the moment. By doing REITs, I don't owe any money to anybody, and I'm just buying into the REITs as money that I have to put into it to continue growing. Now, you won't gain as much growth compared to real estate because of the fact that it's not a ton of money at the same time, but it is increased value of your money over time. You don't have to do anything, and you don't have to deal with the stress. So when it comes down to it, it all depends on you. If you're willing to put the work, if you're willing to deal with the tenants, if you're a handy person and you know how to fix stuff and you want to be able to do that, you want to be able to put that work, then real estate is definitely for you. If you're the opposite and you don't want to put that work, you don't know how to put that work, and you don't want to take that risk or have that types of loans, then yeah, REITs would definitely be a lot better for you. Just continue investing, just continue, putting money in order to grow your income and grow your portfolio, and and don't always just think and just wait with money on the side thinking that the market is going to drop, because it can drop, but again, it can continue to go up. The market has continued to go up. Last video I actually talked about how the coronavirus, if the World Health Organization would have declared it a world pandemic, the market would have crashed. The market was going to go down. The market was going to lose in value. That was my prediction. But the reason the market did not drop in value is because the Feds injected money into the stock market by the billions of dollars every week in order to keep the momentum going, in order to keep the stock market continue to increase. So that has actually helped the stock market increase. And yeah, you might not think that it's actual money that's actually being growth, it's actually being manipulated, but guess what? It's your money that's actually growing. It's my money. I'm actually growing. Since my last video, I've actually made around $500 and just continue to grow more money by every single day. And that's something that that's something that, again, it's real money. If I wanted to take everything out in my stock portfolio, I would have around $7,800 that I would be able to take out, and within 2 business days, it would actually be in my savings account in the bank. So this is what I mean when the fact is that you don't want to sit on the sidelines and just keep thinking, oh, I will invest when the market goes down, because What if the market doesn't go down for another 5-10 years? What if the market doesn't drop and it just continues to increase? Are you just going to sit on the sidelines? Are you just going to sit there and just watch it grow while your money depreciates in value compared to inflation, compared to everything else? It just depreciates in value. So you're just not growing your money as fast as you could by having dividends and value into your stocks. So yeah, definitely, I would definitely encourage you to continue investing. I would definitely encourage you to continue investing whenever you can, even if it's a little bit. It doesn't have to be a lot of money. It doesn't have to be like 60% of your income. In my case, like me in my case, because of the fact that you don't have, there is no specific amount of money. As long as you're putting money into your portfolio, you're actually able to grow. You're actually able to grow your income, and you're able to get dividends, and that can actually benefit you in the future if you ever decide to take it out. Now, something that I did forget to mention is that when it comes down to real estate, when it comes down to REITs, real estate is definitely a lot better when it comes down to doing your taxes. Like the real estate, you're able to write off repairs, depreciation, a lot of things like that you're able to write off, and that's will actually save you a lot more money in taxes. When it comes down to REITs, you don't have that ability to write off, so you're actually paying a little bit more in taxes compared to real estate, but at the same time, you're not having that exposure into doing a lot more work. So it's something to think about. It's something to just, be able to look out for. And like I said, if you're able to, invest, if you're able to continue investing, do so and just continue to grow your income, continue to grow your money. And yeah, by investing, if you have a job, if you have a job or career, you're gaining money from that. You're able to gain money from dividends. And if, whether it's real estate ETFs or mutual funds or anything like that, you're able to gain money from dividends in any type of way, or you're able to gain money from a real estate property. That's all types of income that is good and beneficial to you as an investor, and it will continue to help you grow your money over time. So thank you guys so much for watching. I hope you guys like this video. Hope you guys enjoy this video. Give me a thumbs up and see you guys later. Peace.